Hi, it's Ardisporter, and welcome to another Talk About It Tuesday. I'm your favorite Michigan Realtor, and I have Kyle Kurso here from Legacy Mortgage. How you doing today, Kyle?
I'm doing fantastic. How are you, Ardis?
I'm doing great. I cannot complain. Um,
Love it.
we just working.
Working.
Yep. So we have you back to talk about the physician loan option that you
Hmm.
guys have at Legacy Mortgage. We talked about it before here on Talk About It Tuesday, but we're gonna dive a little deeper. It's not just for physicians, so don't tune yourself out. Take a listen and learn from Kyle. Okay?
Love it.
All right, we're gonna start with question number one. What makes physician mortgage loans different from conventional loans?
I would say the biggest differences are going to be, down payment. So one of them, a lot of these institution loans nowadays, you can do 0% down. And another big thing is the difference would be there's no PMI on these physician loans versus conventional. So if you're only putting down 3 or 5% conventional, you're going to have that PMI until you get to that 20% equity limit.
Right. And that's saving you money on a monthly basis.
Tons of money. It could be, depending on how much you're purchasing your house for, hundreds of
Right.
dollars a month.
That's a big difference.
Mhm.
Do I need private mortgage insurance with the physician loan? You kind of just talked about that you don't.
You don't. That's the good news. Yeah, that's the beauty of it.
Okay. And then what types of medical professionals qualify? Is it only doctors, nurses, dentists? Who can get it?
So two parts. So first I'll start with the 0% down. So for the 0% down, that's only going to be, your physicians, your doctors. That's kind of reserved for them. But when it's 5% down, I'm like, you know, that opens the doors up for a lot of folks. It's a big list here, so I do have to look at it because it's a lot of stuff. But basically, we're talking about residents, fellows, physicians, dentists, orthodontists, nurses, respiratory therapists, veterinarians, CPAs, so your accountants, engineers, attorneys, first responders, police and fire, and also teachers.
Look at that. Come on now. We were all essential in 2020 and we couldn't catch a
Exactly.
break. So this is our chance.
Here's the break.
This is our
Five
chance
years
to catch
later.
a break. Right.
Yeah,
Thanks, Kyle, Legacy Mortgage. So
we got your back.
all right, so it's not all for physicians. Yes, just the 0% down is for the physicians, but that is a plethora of people. And I know that I have a lot of people that I'm connected with on my social media who are in the healthcare field, who are engineers, um, who are
Teachers.
service response people, and teachers. So come on, guys,
Oh,
give Kyle a call. This seems like a great opportunity.
oh yeah.
Yeah. Okay. So, how do the physician loans treat your student loan debt compared to a standard mortgage?
So no matter what on a standard mortgage, when you have your student loans, whether they're deferred or whatnot, if they're on your credit report, you're going to usually have to use at least 0.5 to 1% of that balance for a monthly payment towards your debt to income ratio. On a physician loan, though, if your student loans are deferred for more than 6 months after your closing date, we don't have to add that into the calculation of your debt to income ratio, which is big.
Yeah, that is a big deal because we
School's
come out
not
of
cheap.
we come out of school with a lot of debt.
Exactly.
A lot of us do. That's something to think about, guys. Change your debt to income ratio, and that could potentially change how much you can spend on a house, right?
Big time. I mean, some people could be paying. I mean, if you do the balances right, especially a doctor. I mean, we might have to use $500 a month as a payment, and that's a lot of extra. We're talking about a house. I mean, the
Mhm.
difference in a monthly payment of $500. That's a big difference in purchase price.
For sure. I agree. What are the typical down payment requirements for the physician mortgage?
So as I said, the doctors, they can do the 0% down. We just kind of opened that up recently, so they can take advantage of the full loan to value. But for everybody else, it'll be a 5% down payment.
Okay, that seems straightforward.
Mhm.
What about the interest rates? Are they generally lower, higher, or similar to traditional loans?
The program that we have, it's going to be very similar. Your 30-year fix, it's going to be just about the going rate. It might be slightly higher, but nothing to write home about. Unless, and what we do have the adjustable rate ones as well. The arms that are fixed for 5 years and then they adjust. Those are going to be lower than your typical 30-year fixed rate. So there is a way to get that lower too. And obviously, it's a good time for an arm right now. I know it's kind of scary that people hear that and they're like, oh no. But with rates potentially probably they're going to be going down, it's a nice time to get low market right now, and then obviously you can just refinance once they get lower than your rate.
Correct. And he tells you about that every single time I'm here. So,
Hmm.
um, can I use a physician loan to purchase a second property or investment property, or is it just for primary residence?
Just for primary residences, you can't get a vacation home or a second home or like a rental property, unfortunately. So that's a little bit of a drawback, but
Darn, no second
you
home.
know.
Okay. Um, are there any restrictions on the loan amount, or is there a maximum purchase price?
So these loan amounts, they're capped at 766,500. So that would be the loan amount. So, if you got let's say you had a house for 775, your 5% down payment is going to get you below that. So it's not like it's capped at the purchase price. You just have to have your loan amount maxed at 766,500.
Got you. Okay, good to consider.
Sweet
And
chunk of cheddar.
yeah, and 766.5 is a nice amount of money here in Genesee County to get
Oh
you
yeah.
a nice house.
Yes, exactly.
Um, how does future income, such as a signed employment contract, factor into qualifying for this type of loan?
So as long as you have that signed employment contract that has clear, concise, your starting date, how much you're going to be paid, all that good stuff signed on employee letterhead or employer letterhead, we can use that future income. They just have to you have to the start date for on that contract just must be before your first payment date on the loan.
Right. Makes sense.
So typically, it does skip a month. So if you close October 15th, your first payment is going to be due December 1st. You just have to start your appointment prior to December 1st.
Okay, positions and other professionals. You just need that offer letter that's signed and stated when you're starting. So come on.
Bingo.
What are potential drawbacks or risk of choosing a physician mortgage over a conventional one?
I would say um, the one thing that comes to mind is negative equity. So if you're doing 0% down, you don't have any equity in the house. So when it comes time to refinance, it's a little trickier. Um, like I said too, like with the restrictions of property type we talked about it, you can't buy a second home or a vacation home or anything like that or investment property. But other than that, I mean, it's not too many downsides. Like I know people say potentially higher interest rates, but there were ways to get around that too. Like I said, with the adjustable rate, so there's not too many drawbacks honestly, other than those couple.
Okay, understood. Is there anything else that you'd like to touch on about this product?
Um, like I said, I mean, we have the adjustable rate programs, we have the fixed programs that go from 15, 20, and 30 years. So there is a plethora of different options. And as always, I know I probably say this every time, but if you're looking to buy a house in the next 3 to 6 months, you want to start to get pre-approved now. Because the last thing we want is to have you find your dream home and you say, "Hey, I'm ready to put an offer in. Let's get pre-approved." And there's a little bit of a speed bump that might, derail us for a couple weeks or a couple months.
Right,
We'd rather know about that now, so that
right.
when you do get out there and start searching, your financing is square, and you'll be able to make an offer and get the offer closed.
Make a plan, make it clear, and get it done. I
Get
mean,
it done.
this is a great product. Physicians, 0% down potentially, and other professionals, 5% down payment. That is a big deal. So,
Big deal.
I just want to thank you again, Kyle, for coming on and sharing your knowledge
Thanks for
and
having me.
about this loan product.
Absolutely.
Okay. I look forward to having you on again. I don't know when, but I know it's going to be soon.
There we go. Talk
Okay.
about it Tuesday.
Talk about it Tuesday. We'll see you next Talk About It Tuesday. Have a great week.